So we have a new episode of Legends and Leaders. We have Niccolo, who's been involved in the gaming industry and SPACs and taking companies public, the first quantum computer company to go public. Just really been a pioneer in gaming and technology for quite a while. So it's great to have you.
Great to be here, Ben.
Awesome. So I'd love to just start with a bit of your background. When you were growing up, did you always want to be an entrepreneur and enter the gaming space? Were those two passions you had for business and gaming as a kid? How did this all begin?
That's a good question, actually. I would say that I stumbled into gaming actually via the mobile music space is actually what happened. So, I went to Cambridge University and studied physics, both undergrad and graduate school. I thought at one point that I wanted to be an academic. I thought that I admired famous physicists like, Richard Feynman and, all the rest of the crew in the 20th century who made such a huge impact on everything from the U.S.'s ability to win the Second World War through to energy, through to obviously the space race and aerospace in general. But I worked out through a number of internships while I was at Cambridge University. I worked for Technicolor, I worked for Siemens Solar, I worked for JP Morgan, and I sort of discovered that if I wanted to really have an impact, it was important to be far enough up the food chain that my solar cell research was not interrupted by the guy in the finance department. And so, believe it or not, after sort of working for 6-12 months at each of these companies on and off during summers and Christmas and Easter breaks, I went to work for JP Morgan after school. And I sort of said, hey, I want to be the guy making the budget decisions on whether or not we fund the solar cell research, not the guy who's impacted by those decisions. I left JP Morgan with a few friends after the dot-com bust. We started our own investment bank in London. It's actually still going. It's a little boutique. And I took stock for fees to help list a company called Monster Mob Group PLC in November 2003 on the London Stock Exchange. Mm-hmm. And ultimately, what happened at Monster Mob was it was a business that had a bunch of great private company leaders, were not great public company leaders. And they had a terrible profit warning. The business stock price didn't perform very well in sort of, April of '04. And I had a moment as a young physicist crossing over to business where I went, oh goodness, like I might get nothing for all of my work the last year on this IPO. And so I put together a business plan. I trotted along to the largest shareholder and I said, you're going to be out of cash in 9 months, but I think I have a plan to fix it. And so I was fortunate enough to have somebody bet on me at a young age. I wasn't even 20. I was 23 years old maybe. And I joined the board and I joined this company as the chief operating officer. And I did the sort of proverbial Elon Musk sleep in the office, role for a year or two, where I was doing all the jobs. We restructured the company. We probably cut half the staff. We found, a business model in the days of, early days of ringtones, if you remember those. So early days of mobile music. And we found a profitable business model in kind of 2004 and 5. And we turned this little public company that probably had a $10 or $20 million market cap, running out of cash when I joined, into eventually a FTSE 250 company, 3 years later, that was doing, very meaningful EBITDA, probably $250 million of revenue, and probably $50 or $60 million of EBITDA. And then we sold that in February of '07. And I moved back to the U.S. I went to run a gaming company in San Francisco called Hands On Mobile. There was a feature phone gaming company that had wanted to merge with my UK-listed company, Monster Mob, back in 2004. I did Hands On Mobile for a couple of years. You'll find it entertaining for those who remember that, Parallel Universe, Glu Mobile, had an IPO in 2007. And I watched this huge valuation from London going, goodness, why am I working so hard in London with fund managers telling me I'm worth 6 times EBITDA when these guys on the NASDAQ are getting told they're worth 4 or 5 times revenue? I better get me some of that, right?
Right.
And so, I moved to San Francisco because of that. Glu had a huge profit warning and challenge after its IPO. It spent all the IPO money on some acquisitions that, ironically, I had passed on at Monster Mob 2 or 3 years before, so I knew they weren't good deals. And Glue, Glue had a terrible experience first couple of years they were public. They went from 11.50 a share to 22 cents a share in about
Wow.
15, 18 months.
Oh
It
my
was the
gosh.
worst performing IPO either ever or in a long, long, long time. And so I actually bid for Glu Mobile from Hands-On Mobile in 2008, late 08, early 09. And I lined up money from, private equity firms like Francisco Partners and Platinum. And Glu's board, politely told me to buzz off in early 09, but I knew it would make a mess for them competitively because they had a bunch of earnouts to restructure. And then lo and behold, throughout the course of 2009, they decided they wanted to make a CEO change.
No.
And I got a phone call from Egon Zehnder, Martha Josephson, in the fall of 2009, going like, "Well, we've looked around, and the board's decided that you might be the right guy to run this firm because you've obviously got a passion for it, and you had enough of a passion to bid for it." And so I actually left Hands-On Mobile between Christmas and New Year, 2009, 2010. I started Glu on January 4th, 2010. I'm not going to say the rest is history, but Glu Mobile was very similar to Monster Mob. It was a broken public company, with a $30 million market cap when I started, running out of cash in 6 months. It had to make massive platform transitions to pivot out of paid download to free-to-play games, to pivot out of feature phone games, into smartphone gaming. And fortunately, I had a background in what we need to do and a strong conviction on how to pull that off. And so Glu's board ultimately hired me for my plan. I wrote them a famous presentation that I think's been quoted in a few management books since, where I said, a return to $10 a share is what I have a plan for. And I wrote out a business plan that said, hey, I'm going to run off the feature phone business. I'm going to grow a smartphone business. Revenue is going to follow a dust bowl shape as one new thing is growing from zero and another thing is shrinking from, about $60 million of revenue by the time I got there. And so I knew it'd be tough, but we literally executed on that plan and we beat that plan. So, we made the pivots to free to play. I had strong conviction from my time at Monster Mob, looking at companies in China where we'd made acquisitions, businesses like Shonda that made a pivot from subscription to free to play and made more money. And so I said, hey, Glu's going to have to pivot to free to play and pivot to smartphones, and we're going to have to literally throw out half the people, rebuild a new talent pool, move to a new business model, and do it while managing, a dwindling cash pile and actually a debt pile. I started with net debt, not net cash at Glu. Huh. But look, I mean, we pulled it off, and by 2012, it was clear the business was in better shape, financially. In 2013, I started work on this. I had this idea to build this Kim Kardashian game based on a product called Stardom, an acquisition that we made in 2011 in Canada, and that game worked. And I bought the IP from Atari for Deer Hunter. And that game worked. And so 2014 was kind of a breakout year for Glu, where the share price, went from $2 or $3 to $7. And look, we continue to make great acquisitions. I'm very proud of them. I think, my friend Bernard Kim, who now runs Max Group, probably saw the success that Glu had and did the same thing at Zynga. But we made some great acquisitions at Glu, and ultimately the company was sold for, $12.50 a share in 2020, closed in 2021. And so I am very proud of kind of the 11 years that I was involved with Glu as the CEO and the executive chairman and the chairman, because we delivered on that business plan and then some. And we also were fortunate enough to pioneer, the first free-to-play games on Apple and Google Play, the first subscription games on Google. We built the first Google Glass games. We built the first universal currency games. We took lots of experimental bets. Some of them worked out, some of them didn't. But if you look at the foundations of the app stores today, every element of business model and mobile advertising, incented, rewarded advertising, we pioneered all of this at Glu, and we were a great partner for Apple and Google as well as the advertising ecosystem. So that might be what you bargained for, but that's the quick journey from physics to gaming.
So, where you said you had the idea for this Kim Kardashian game, right? It was based off of something you guys acquired. Was the idea initially, let's go sign Kim? Like that was the perfect person, and how did that even come about? Like, was she into it originally?
Yeah, so I first got, it was my idea for better or worse, and I sort of said, let's take a great game engine that has high lifetime value, but has a problem with user acquisition and has
Mhm.
ultimately a
Right.
branding issue. And so Stardom was built by my friend Chris Locke in Canada, who had previously built the Smurfs Village game, which was a big deal in 2010 and 11. If anyone remembers it, it was a Capcom game.
Yeah,
Did very
sure.
well. It was top 10 grossing for a year. Glu's claim to fame was we built the first successful free to play shooter game. So we built Gun Bros that launched in Q4 2010. It was the first action game on the Apple and Google stores. And frankly, it was very revolutionary to have a free to play mobile action
Hmm.
game. Like, I'm very proud of that game. It was a lot of fun. Um, so we bought Chris Locke's studio. He left Capcom. We bought his studio. He built these Stardom games, and he built this game called Stardom Hollywood. And so I sort of went, hey, if I can find the right influencers to really amp up the marketing and reduce UA costs, this one could really work because the LTV is there for the players who stick to the game after the first day. So I got in touch with Kim Kardashian through my friends at William Morris Endeavor, and we've obviously had a very successful collaboration. I mean, Kim and I are the same
Yeah.
age. Our birthdays both in October. We're still friends to this day. She's done well for me, and I've done well for her, financially. And believe it or not, I think I approached her in the middle of 2012. She was busy, didn't really take the phone call till January, February 2013.
Huh.
We had a great presentation for her where our art team in Toronto really did a good job of capturing her likeness. And she sort of said, hey, you guys really get me and my brand. And
Hmm.
we must remember at the time in 2012, Kim had 30 million Facebook followers, and some followers on Twitter, but she's mostly a Facebook influencer. And I throw that out there because the game launched in June 2014. It's been a big success. We're coming up on the 10-year anniversary of the game here. I extended the contract twice.
Hmm.
Became friends with more of the family. Built a game with her sisters, Kendall and Kylie. Negotiated with mom, Chris Jenner a couple times. And I think that we really showed her that she could be a serious businesswoman if you want. And so I think the journey for her was from influencer to gaming to fashion and cosmetics. But ultimately, it was a great partnership, as it was for many of our successful acquisitions. And so finding a way to pioneer business models is really what most of my career has been about. Can you pioneer business models in the public markets and demonstrate that you can have product success, but also financial success for shareholders?
Right. Right. And you've done this, you've replicated the model essentially multiple times. So you did it for Gordon Ramsay, you've done it for other, and so it's about user acquisition really when you have these like influencer like partnerships. It helps expand the business so much. Is that generally the main reason, or is it?
Yeah, I mean, look, we pioneered a new type of game about a person. No one had
Yeah.
done that before, right? So it was a new category, right? Gordon Ramsay was very successful. What we found ultimately is that TV personalities are more successful than almost any other category.
Huh.
We built a James Bond game at Glu. We built, Hercules games. We built a Terminator game, with Arnold Schwarzenegger in it. But at the end of the day, the appointment mechanic that Gordon and Kim had of watching the show every week,
Hmm.
with an audience that wanted to follow through with that appointment mechanic and play a game every day when you're not watching the show. And so what Kim and I worked out is that if we could get the game to parallel her real life, there was this continuous transmedia, character, right? So she'd go to Mexico, the game would go to Mexico. She would go
Huh.
to, go skiing, the game would go skiing, and we could follow even faster than the TV show because that had to be edited and come out in seasons and all this stuff. But in real life, social media and her, where she is, could follow exactly what the game update was because we could update the game with like a 2 week, effectively notice period.
Yeah. So how did you transition from this world of gaming to this mobile focused, taking companies public with a mobile focus? I mean, mobile focus seemed to be always your focus, but why go into taking companies public and not just developing more games?
question. I mean, I think you reach a point in your career where you sort of say, have I mastered this? What do I want on my business tombstone? I was having another child in 2016, 17, and I sort of went, there's an element of me that misses the fundamental science. I want her to know that, if she works hard and goes to Cambridge University, it isn't only gaming you can do with, successful career. And so, believe it or not, I had a sort of transition that I foisted on Glu's board, and Tencent was very unhappy with this at the time because they invested, $120 million in Glu in 2015 and 16. But I ultimately said, hey, I want to go and do this hardware business with Andy Rubin. And Andy had been a friend of mine since I built the first Android games, 10 years before. And so Andy and I went to build this company, Essential Product, in 2017. And at Glu Mobile, I bought CrowdStar and announced the deal at the November earnings call in 2016. And then I went, I'm going to be the executive chairman now and really help mentor the next generation of leader, who was Nick Earl, our president, who we'd hired from Electronic Arts. So life goes in full circles here. Eventually, Glu was sold back to Electronic Arts. We all get recycled. So I went back into the hardware space. We raised $500 million, $300 to $500 million at Essential Products. We had a successful phone launch. Andy's personal life unfortunately exploded on the front page in sort of September of 17. And ultimately I negotiated a board divorce, if you will, in 2018, where half the board left and we gave back half the money because it was hard to sell the company when there was, Me Too stuff associated with, Andy's time at Google, unfortunately, and 13 other executives at Google, including, Eric Schmidt and so on, David Drummond and the whole crew there. So I then went to join the board of a public company called Residio, based in Austin, where I moved to at the end of 2018, October 2018. And this was the spinoff of the largest public company in Austin at the time was the Honeywell Home business. 13,000 people, billion of EBITDA, $5.5 billion of revenue. And I did that for a couple of years, but I'd been looking at doing a SPAC for a long time because most of my career at Monster Mob and Glu and Hands on Mobile and Essential, I like doing roll-ups. I have a lot of expertise in it. And so I realized that a pure form of my expertise could be expressed through driving public company roll-ups. And so I got into doing the first, SPAC DMY1, which IPO'd in February 2020, with a new business partner of mine, Harry Yu. Harry was the former CFO of Oracle, CFO of VMC, CFO of Accenture. And Harry and I, were fortunate enough to be able to attract Goldman Sachs as our underwriter. And we were the first SPAC focused, you're right, on mobile apps, mobile gaming. Took that out, ended up, taking public a business called Rush Street Interactive in the online casino space. Neil Bloom's online casino business. We then followed that up with Genius Sports Group, which was, an online sports betting business. Both those deals were announced in 2020. RSI closed right at Christmas 2020, and then Genius dribbled into April 21. And then my passion for fundamental science, resurfaced, and I went, hey, I've been following the quantum computing space for 20 to 25 years of my career, ever since I was an undergraduate at Cambridge University. Wow. And I always said, in the 2020s, quantum computing is going to come into its own because it will have enough computing power to do something really special. And so sure enough, we started looking around in 2020 at quantum computing companies, and I canvassed the ecosystem. I did some diligence. We found what we thought would be the leader, and we took IONQ public in a transaction that was announced in March 2021. That closed in September 2021, and we're very proud of it. I mean, IONQ is our best performing stock to this day. It is the independent leader in the quantum computing space. It has the most powerful machine. We raised $650 million for them. RSI and Genius raised a lot of money for it too. I mean, RSI was almost $400 million. Genius has raised $1.1 billion of cash between the IPO and a secondary they did, 3 or 4 months after the IPO. And then after IONQ, the world of satellite data beckoned, and we took Planet Labs public in an IPO that raised $595 million. And it closed in December 21. So today I'm on the board of 5 public companies, and 1 private company. So never a dull moment. I also bought a business with Carlyle in the gaming space called Jagex in January 21 that closed. It kind of took all of 2020. And Jagex is, it's a big business. I mean, it's closer to it's approximately $100 million EBITDA business. Been around for 20 years. It's the RuneScape MMO. It's kind of the pride and joy of Cambridge, England, and the UK gaming space, I'd argue. And so 60% of my life's in the gaming space today, and 40% in the fundamental science space, roughly. And I love all of these companies, and I'm very proud of all of them executing at and above their IPO plans, which is kind of the measure of, did I do a good job as a sponsor?
Mm-hmm. And how, throughout, I'm running your website. Throughout 2020, you've raised over $2 billion. I'm sure you've raised other capital throughout your career as well. You mentioned, what have been some of the things that have helped you raise that, large amount of money? Is it what are some of the techniques you've used, or selling points, or what has it generally been?
So myself and my business partner have had, a tremendous career in the public markets, right? I mean, I've done 10 or 12 public companies. He's done 17. So together we're, 25 or 30. We've made maybe 200 acquisitions as public company leaders. We've done almost 100 quarters as public company CEOs and CFOs. And my partner Harry's done $100 billion plus market cap companies like Broadcom and, Accenture that are very successful. Oracle, obviously, as well. So, I think our record is hard to beat in the public company space. Investors love the complementarity of the two of us. They love the quality of the companies we brought to market. Obviously, the public markets are not as exuberant right now as they were 18 months ago.
Only Kava.
I don't think you could raise that amount of money, in 2023. And so timing matters in life, both professionally and personally. Timing matters.
Yeah. So, so basically, you've done a lot of these public offerings through the New York Stock Exchange, right? Why generally go New York Stock Exchange versus NASDAQ? I think that's one of generally the big questions when you're going to take a company public.
I mean, I've done both, right? Glu was on the NASDAQ, Monsterma was on the London Stock Exchange. Planet Labs, IONQ, you're right. RSI Genius are on the NYSE. I think they both have their pros and cons. I mean, it's hard to beat the NYSE's bell ringing ceremony. No one has that building. No one has that ceremony. No one has the gavel, right? No one has the balcony. The NASDAQ is different. They work hard at digital marketing and getting your name in Times Square, on the billboard, but it's not the same experience. So both of them compete on price at times if you're a hot listing. Both have different indices. NASDAQ has a lot of good tech indices that have been built up over the past 50 years. So I think you can do well on both of them. The NYSE at one point was, of course, not focused on tech. Today, they're doing a pretty darn good job of it generally. And so you can find large businesses on both, even though Apple and Microsoft were the poster child for NASDAQ, back in the early 80s.
And what do you think is next for your career? You've done a lot of stuff in gaming. You've got some science as well. What do you see yourself doing now? Do you see yourself doing more SPACs once the market picks up again? What do you think?
Yeah, the short answer is yes to everything. I'm looking in the private markets. I am looking at making personal investments in the private markets. I'm looking at whether or not I should be joining a private fund of some kind. I'm continuing to watch the public markets and thinking hard about when is the timing for another public vehicle. And I think my career is likely to stay in both gaming and consumer internet, as well as keep an eye on fundamental science. I mean, right now the markets in general want profitable companies, and pioneering fundamental science is rarely profitable, right? And so, whilst I have a passion for changing the energy industry and robotics, it's will they be welcomed by private and public investors to the same extent that growth was a couple of years ago? Probably not, right? And so free cash flow positive companies, profitable companies, private and public space are probably where I'm going to be focusing my time. Roll-ups are where I'm going to focus my time. And ultimately, I have a unique set of skills that not everybody values, but a lot of people do. And so I'm keeping, strategic breadth to my portfolio right now as I think about, the kinds of companies that will do well in a world of high rates, high inflation, geopolitical challenges. Hasn't escaped me that, of course, AI is doing well, but so are defense companies, and so are some energy companies. And in general, if you're digging things out of the ground and inflation's high, you're probably going to do okay, right? As will defense companies that are have cost plus contracts will also do well in an inflationary world, right? So keeping my mind open to the kinds of companies that did well in the 1970s when we had geopolitical challenges, we had high rates, high inflation. Because whilst I don't think we're going to get to the 18% inflation and things are kind of leveling off, I think we're going to be in a 4 or 5%, rate in inflation world for a long time. It's not going back to 2% next year.
Yeah, I mean, I hope it does.
We all do. It'd be good for tech, and I'd love to be, focused on the tech space. But for a while, I think we're going to have higher rates and higher inflation than we've been used to the last 15 or 20 years.
Mm-hmm. Well, look, Niccolo, it's been great to have you here. I appreciate you sharing your stories, how you started out to really where you are now. And I look forward to you having more success in what you're going to do next.
Really appreciate it, Ben. Look forward to returning when we have more news and more updates. So I wish you a great rest of the day, my friend.